Hello, everyone. Welcome and thank you for joining us for today's webinar, 5 Steps to Becoming a Growth-Driven Accounts Payable Department, brought to you by IOFM and sponsored by Tipalti. We have a few housekeeping notes to go over before we officially get started. If you have any technical issues or questions using the WebEx platform, please use the chat box and I will respond right away. If you have any issues with audio, please click on the phone icon above the chat window to receive the teleconference information. For those that do need to call in, to ensure call quality, everyone's lines have been muted today. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. If you continue to experience difficulty, please email webinars@iofm.com and we will respond as soon as we can. We encourage you to ask questions throughout the presentation. Please type your questions into the chat box and hit send to submit them. At the end of the presentation, we will have our presenters answer these questions. We will also have 4 polling questions during the webinar today. A pop-up box will appear when we run each poll. Please choose from the multiple choice answers and hit submit. We would love to have your participation and insight today. And this webinar will be recorded, and you will receive a thank you email with the on-demand materials within 2 business days. And with all of that out of the way, I would like to introduce our speakers today. Our first speaker is Mark Brousseau, president of Brousseau and Associates. Over the past 26 years, Mark Brousseau has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Brousseau advises prominent end users and solutions and services providers on how to use automation to improve document and payments-driven business processes. Brousseau has chaired numerous educational conferences and has served on several industry committees and boards. He resides in Center City, Philadelphia, with his wife and 3 sons. And we will also hear from Derek Chang. Derek Chang is the Senior Director of Corporate and Content Marketing at Tipalti, the leader in global payables automation. He leads the development of content and is the co-host of the Business Finance Friends podcast. He's authored multiple white papers and articles in the areas of finance operations and is an avid technologist. I still struggle with that word, for back office processes spanning a career of over 25 years. And at this time, I would like to welcome our speakers and hand the webinar off to Mark.
Thank you so much, Kelsey, and thank you all for joining us today. So as economies begin to reopen, growth has become a top agenda item for businesses of all sizes once again. Today, finance departments are focused on finding ways to help support their business's growth. CFOs, well, they're already taking on more strategic responsibilities for finding and funding growth. Now it's up to us, the people in accounts payable, to help drive growth for the business. But in order to do that, well, we're going to have to find ways to eliminate all those manual, repetitive tasks that hold us back from spending time on things that move the needle. And that's what we're going to discuss during today's webinar. We'll talk about how accounts payable is becoming a true growth enabler for the business. We'll lay out the changing role of accounts payable, as well as accounts payable leaders within their organization. We'll talk about how repetitive manual tasks inhibit business growth. We'll discuss the technologies that every growth-minded AP department needs. And we're going to leave you with an action plan for transforming your AP department into a high-powered growth engine. But before we do any of that, we're going to start with a poll question, which is about to be displayed on your screen. We want to know, which of the following is your finance department's top focus for improvement for the rest of 2021? Is it better cash forecasting? Is it tighter spend management? Is it greater risk mitigation? Is it improved operational performance? Tell us what it is top of your finance department's agenda for the rest of this year. And we'll discuss the results in just a moment. So when you talk to senior finance execs, Derek, what are they telling you is top of their mind these days?
Everyone is thinking operational performance. Certainly within the age of COVID and working remotely, we want to make sure that companies can scale and optimize everything that they're working on, as well as still achieving the best practices around AP.
Would you argue that the way that many AP departments today simply isn't not only scalable, it might not be sustainable?
It certainly depends on the company, but we definitely see there's always opportunities to improve.
What's the biggest time waster in most AP departments?
uh, Fighting about what to do next, probably. No, I think it's paper. I think paper payments, paper invoices, that's always a struggle. Getting things to approve, uh, reconciliation is a big one. So yeah, there are lots of areas to consider.
We asked our attendees, which of the following is your finance department's top focus of improvement for the rest of 2021? 41% of our attendees today, Derek, identified improving operational performance as their top focus for improvement. 27% of our attendees said their finance department's focused on tightening up their spending. 17% of organizations want better cash forecasting, and 12% of our attendees want to find ways to mitigate their risk. None of this surprises you, does it, Derek?
No, in fact, I would say D probably feeds into B a little bit. If you can optimize your performance, you can kind of control some of how you spend, at least operationally.
Are you seeing that CFOs and other senior finance execs recognize that opportunity that you just described?
I think that we're all getting a little impatient. Certainly, senior finance folks probably fall into that as well. As the world's moving, and we want to contain it, and we want to make sure that things are operating and there are no surprises out there. Not a surprise at all.
Seems to me that data underlies all of these different priorities. How good a job do you think most AP departments are doing at extracting and managing the data that flows through their departments?
Well, I think smaller organizations probably feel like they have it well under control. They don't have a lot to deal with, but as you start to grow, as your operations become more complex, when you have multiple entities, when you have a lot more spend to contend with, then you're probably there are ways to improve all of that.
And growth is indeed something that many more businesses are looking at. After 16 months of cost cutting and other defensive measures, businesses of all sizes are ready to grow again. 88% of US leaders expect an improvement in global economic growth over the next 12 months. That's according to our friends at PricewaterhouseCoopers. In fact, it might surprise you to hear that half of US finance leaders expect to expand their headcount over the next year to capitalize on those new opportunities for business growth. And there's lots and lots of ways that businesses hope to achieve that growth. Some businesses are increasing sales and marketing activities. Some are creating new product lines and standing up new business units. Some are acquiring and merging with other companies. Others are establishing regional offices. A lot of you on the line are probably looking to tap into emerging and developed markets across the globe. And that is indeed a great way for businesses to smooth out dips in their sales cycle and to access new buyers as well as new partners. Regardless of how it is that your business hopes to grow, CFOs are probably playing a big part in those initiatives. These days, CFOs are much more than a financial scorekeeper. They're spending more and more of their time on things like finding and funding ways to drive long-term growth. And they're doing it not just in finance, but across the enterprise. CFOs also are looking for ways to transform the finance function to scale to meet growth demands. This is what Derek was referring to. And you know what? Finance is critical to helping the business achieve its growth objectives. And AP can play a big part in that. More and more finance teams and AP departments are adapting and adjusting their priorities to support business growth. Make no mistake about it, the finance function is taking on a more strategic role within the business, and AP is going to need to be a part of that. 47% of CFOs say that one of their top priorities is to establish finance as a better partner to the business. That tops hot button issues like cost reduction and compliance and reporting. These are the things we tend to focus on when we think about future initiatives. But you know what? AP is up to the challenge. More and more, I'm meeting AP leaders just like yourself who say that their role is changing and they are changing their department to meet the challenge. AP leaders, they're helping the business become more agile. They're doing it by streamlining the processes. AP departments are helping the business free up cash to invest in growth initiatives. They're doing that by paying suppliers electronically, capturing more early payment discounts, earning cashback rebates, optimizing days payable outstanding. AP departments are aggregating and digitizing data so they can make the AP department an information hub so that CFOs and other execs are able to better manage their cash, their spending, their risks, even the finance department's operational performance. And AP departments are tracking more and more data these days so they can help the business mitigate risk. We're trying to identify anomalous transactions more quickly. So when you roll it all up, AP is going far beyond the types of responsibilities that we've traditionally associated with AP. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, how would you describe your AP department's current level of automation? Are you fully automated, electronic, touch-free processing? You're living the dream? Is your AP department largely automated? You've deployed some technology, but you still have some manual processes. Is your AP department partially automated? You've deployed some technology, but you still have lots of manual processes. Or are you a manual paper pushing operation? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. How much progress have we made in automating accounts payable over the past 16 months, Derek?
Well, no one's really truly automated, but I think certainly with the pandemic, a lot of companies moved faster around needing to minimize their manual processes, paper processes, handoff processes. We're seeing a lot more activity, certainly on our end, um, as we go into thinking more about consolidating some processes. So maybe things you hadn't considered to be, um, if you don't consider things to be a holistic or whole consolidated process. I think a lot more of our focus has been around taking things that normally were discrete and bringing them together. Uh, and certainly that reduces a lot of the friction, reduces a lot of the single points of failure, and automating through that as well.
I think you really hit on one of the biggest misperceptions about AP automation during the pandemic, Derek, and that is, I think there was this notion by some folks that this wasn't a time to automate, this time to hoard cash, not invest it in technology, and yet we have seen an acceleration in automation initiatives. What's going on there, and do you see any let up in sight?
No, there's no let up. This is the new. And you think about like, I'll use restaurants as an example. Not that they have much to do with AP, but when restaurants were struggling because people couldn't go to them, what did they do? Well, the successful ones adapted and provided more takeout service, and they modernized a way to make, have orders come in. Similarly, retail functions, retail businesses, they suddenly had to solve a lot of their inventory problems and to be able to support at home shopping. And for AP, we we can certainly say we've seen where, situations where I'll give you an anecdote. We had one customer come to us where she was the controller and she would have to drive uh, approvals. She had to drive checks, paper checks to her CFO's office, CFO's house, sorry. And there would be these stacks of checks that CFO would have to sign, and have and then get them back to the controller. The controller then has to go and mail them out. And that is who does that? Who would want to do that? And I unless you are a DoorDash delivery person, I don't think you want to be driving to your CFO's house.
So what will be the lasting impact of the pandemic? What will be the things we've adapted to in the past 16 months that we're going to continue doing on a go forward basis? And hopefully that last story isn't one of them.
Yeah, I think it is about streamlining those processes, reducing your single points of failure, reducing the handoffs and gaps between processes. There's no need for those anymore. The technology exists across the board to solve for the entirety of that problem.
We asked our attendees, how would you describe your AP department's current level of automation? 49% of our attendees on the line describe their operations as being partially automated. They've deployed technology, but they still have lots and lots of manual processes. Another 36% of you say you're largely automated. You've deployed technology as well, and you still have some manual tasks. On one hand, 9% of you say you're fully automated. 6% of you say that you're completely manual paper pushing operation. 49% of the attendees on the line, Derek, might be comfortable with the fact that they have something in place, but the reality is that semi-automated isn't good enough anymore, is it?
No, think bigger. There's room to think bigger. And even if you don't feel the pain, maybe you don't realize that you can do something else with your time. Going back to spend management or optimization of best practices or scale, all those things factor in. And if you can fully automate or get largely automated, then you have the opportunity then to go on to other areas of your business and focus on those things.
71% of IOFM members say they plan to automate their department further. And what might surprise you to know is that 44% of departments that describe themselves as being largely automated have plans to deploy more technology. And the reason that so many departments are automating is what Derek was getting to. They're recognizing that they've got to find ways to streamline their operations. Any way you slice it, manual AP processes are a big barrier to the growth of our business. Every day, AP staff spend their days inundated with manual, repetitive tasks. You know the drill. Things like keying invoice data, shuffling paper, chasing down information, fixing errors and mistakes, and responding to those blasted emails and phone calls from suppliers and stakeholders about where things stand in the process. And all the while, we don't have time for growth generating activities. Things like analyzing data or collaborating with procurement or building relationships with suppliers. These are the things that the business needs us to focus on if we're going to become a growth driver. And one of the biggest time sucks that we spend our time on in AP is being a customer service department to our suppliers. It's not uncommon for 1/4 of an entire AP professional's day to be spent providing updates to suppliers and stakeholders. It costs about $3.60 to respond to just one call or one email from a supplier about the status of things. Now, I know what you're thinking. You're thinking $3.60 ain't a whole lot of money. But when you think about all the calls and all the suppliers that everyone in your department receives each month from its suppliers, well, now we are talking about big money. And the thing is, When your staff is working from home, it's harder to track down the information required to respond to all those inquiries. So chances are it's costing your business a whole lot more than $3.60 to respond to a single inquiry. And the complexity and the inefficiency becomes even more overwhelming when a business layers on things like cross-border payments or expands into digital marketplaces. Now you've got two choices. Now you've got to figure out, are you going to add staff to contend with this new volume and new complexity, or are you going to limit the markets that your business enters? No CFO and no CEO wants to hear that we probably shouldn't enter that growth market because we really can't afford to support that growth. The root of all of this, folks, is that it goes back to the way we do things in accounts payable. Most of our departments rely on this hodgepodge of point solutions and closed loop networks for tasks such as supplier onboarding and invoice management and supplier payments. And each of these systems, each one has their own logins and passwords, their own user authentication, their own file formats, their own proprietary integrations. The list goes on and on. So what happens? Well, now we've got all these data silos, all these handoffs that create manual tasks, all this information latency, all these errors, this lack of visibility. In most cases, well, key data is not captured. Information's poorly organized. It's not timely. Our systems are fragmented, and all the while, our decision makers can't access the key variables they need to make the decisions to help our business grow. And there's no better example of all this craziness than when it comes to paying our suppliers. Just think about it. Your AP staff has to manually enter invoice information, call, email, or fax payees to verify legal entities, print and mail checks, log into multiple bank portals to schedule electronic payments. The list goes on and on. And it's no surprise that multi-level approvals for payments are frequently delayed. How can we get a hold of people if we're not driving those checks around town, like Derek said? And you know what? It's even more complicated when you think about your tax forms. In many cases, we're not even collecting them, or they're outdated. And then cross-border payments and regulatory issues and tax compliance and currency conversion, that all comes into play when we're doing business globally. So the result of all of this is that our staff is wasting endless hours making payments, resolving errors, and reconciling things. And the reason for that is that only 7% of all IOFM members have fully automated all of their AP tasks. The rest are like the people in our earlier poll. They're relying on manual and semi-automated processes. So what happens is that 47% of AP teams are spending 5 to 10 people hours per week on tasks such as invoice processing. Now, when you use US Department of Commerce data, what you find is that means that your business is wasting somewhere between $15,000 and $30,000 a year per FTE on those manual AP tasks. I want you to stop for a minute and think about that. Think about what you're paying an AP person, and think about taking $15,000 to $30,000 out of the equation. And you know what? The bigger you are, the more time and the more money this is probably costing you. And things only get complicated as you grow. Consider the situation if you're a multi-subsidiary company. And by the way, even smaller businesses these days have multiple subsidiaries. When you've got multiple subsidiaries, now you've got different systems to integrate, complex processes to try and navigate, and you've got far-flung finance teams trying to work together. Think about just all the time and effort it takes just to pay your suppliers for each of these entities. Long before you ever get around to making a payment, you've got to collect and validate and track banking information and tax forms for each supplier, for each entity. And just think of all the resources required to make payments in local currency. You got to log into multiple bank portals. You got to manage those banking relationships. You got to pay all those banking fees. gads, think of all the payments that you got to reconcile, all the spreadsheets required to do it. And you know what? For a lot of you, you don't have integration between your subsidiaries and your headquarters. So that means that now you're generating reports so you can roll up information to HQ, and tax compliance only makes this riskier. We all know that FACTA requires that US entities validate all international payees. But when you've got to navigate all the considerations and get all the requirements for FACTA, well, that can be tricky. And the burden of getting payees to update their tax forms and tax details, well, that can be downright hard. And if you do it wrong, well, now you're going to be facing IRS fines and wasted time and duplicate payments and even more. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, which of the following tools or technologies has your AP department already deployed? Check all that apply. Have you deployed an automated supplier onboarding solution? Have you deployed an automated invoice management solution? Have you automated your global payments? Have you automated your tax and regulatory compliance? Or have you done none of the above? Take a moment to respond to the poll question now displayed on your screen. And we'll discuss the results in just a moment. Derek, this gets at a question that a lot of AP leaders ask me when I see them at conferences. They say, Mark, today we're a manual operation. Where do we start? What's the answer to that question?
Uh, wow, that's a big question. Where do you start? I think you take it as a whole process, right? What does it take to make a supplier payable? How do you approve those invoices? How do you get those into your ERP? How do you ultimately pay and reconcile? Um, so it is thinking more holistically and broader than maybe what you're used to. Yes, invoices are a pain, global payments are a pain, but maybe they're not the only pain. And if you can solve across the board the entire process, then you don't think about uh, you don't have to consider all those small steps anymore. You can take larger steps.
We asked our attendees, which of the following tools and technologies has your AP department already deployed? 2/3 of our attendees, Derek, have
Yep.
already automated their invoice management. No surprise there. 23% of our attendees said they've deployed an automated supplier onboarding solution. 21% of our attendees have automated tax and regulatory compliance. 19% have automated their global payments. What advice would you give to our attendees based on the results you're seeing here, Derek?
Well, the results are indicative of what's out there right now. Invoices were the big pain. They've been solved. They are fairly commoditized, I would say. And so now, where do you go beyond that? And it really is about thinking more around the entire flow of that supplier payment and how do you get through that?
We know that digitizing payments has become a top priority for organizations for many of the same reasons that there's been an acceleration in invoice automation over the past 16 months. We simply couldn't get in the office to cut paper checks. It's very tempting for a lot of the folks on the line to think that the easiest way to do that would be to pick up the phone and call their bank. Is that a good idea, Derek?
Do banks even have people anymore? I'm not sure. I, I think in order to get that auditability uh, that you need ultimately, and to run your reconciliation at the end of the month or quarter, whenever you decide you need to do that. Some of our folks run it weekly. Um, in order to know where that check landed and how it landed and did it make it there and if there were any fees associated with that, you really need to have a much more streamlined, preferably electronic type payment process, ACH wire, if you're doing global ACH or SEPA, Swift payments, things like that.
As the results of our last two poll questions show, Organizations still have lots of manual AP processes to contend with, and CFOs, particularly those with growth on their minds, know that they can no longer afford to have those manual processes stand in the way of their business's success. PricewaterhouseCoopers finds that 77% of CFOs are prioritizing operational efficiency. 43% plan to increase their investments in digital transformation by double digits in the next year. AP departments, as I told you, well, we're already got plans to automate. It's clear what needs to be done. The question many of you might have is, how should it be done? So to help your AP department along its way, we've identified 5 steps to becoming a growth-driven AP department. These strategies are going to help ensure that your department can be a good partner to helping your business grow. Grab your pen and paper, let's go. The first step to becoming a growth-driven AP department is to think touchless. Automation isn't good enough anymore. I know. Some of you are thinking, touchless processing, Mark? I'm pushing around paper all day. How the devil is that even possible? The fact is that there's 4 things you can do to help make touchless processing a reality. And it all starts with supplier management, supplier onboarding. A lot of you are still relying on phone calls and paper forms and even emails to onboard and register your suppliers. And the results? Well, the result of all that is that the process is too long, it's too costly, and in my opinion, it's too darn risky. So what you want to do is you want to find an on-demand self-service supplier portal. They are table stakes these days. These solutions are going to accelerate your supplier onboarding and help you mitigate those payment errors, as well as improve your communications with suppliers. The next step is to find ways to better manage and reconcile your invoices. 2/3 of you say you've already deployed some technology for invoice management. And as Derek said, this is a commodity these days. All AP departments should be automated in their invoice processing. There are no excuses anymore. Cloud technology makes it easier than ever. What you want to do is you want to find a way to convert paper invoices into an electronic format, either through optical character recognition, OCR, or by leveraging electronic invoicing. I know many of you are getting more and more invoices sent to you via email as PDF attachments. Now's the time to find ways to extract that data from those PDFs automatically. If your people are opening Outlook on one screen and keying invoice data into your ERP on another, that ain't automation. Folks, there's technology out there that can strip that data out for you automatically and error-free and accelerate your processes. Once you're able to get at this data, well, now we can start to standardize and normalize the processing of our invoices. We can capture our data, we can validate it, match it up against POs and shipping docs sitting in our ERP. And then when we have an unmatched invoice or an invoice that we really want to go through some kind of approval process, say it's a high dollar invoice or an invoice from a strategic supplier or even a new supplier, we can provide business rules for how that invoice ought to be routed electronically. None of this risky email business. It's going to be done with our business rules. What's more, once we've got an approved invoice, now we can upload it automatically to our ERP without anyone ever having to touch it. I can't tell you how many shared services organizations I talk to who've deployed automated invoice processing technology and are still keying invoice data into their ERP. Stop doing that. There's plenty of solutions out there that integrate with ERPs. Yours needs to be one of them. And all of this creates an environment where data can be reconciled in real time. And that's a big deal here, because now once we reconcile information in real time, it obviously eliminates manual processes, but it also allows us to stay on top of our information. Becoming touchless, It also requires you to find better ways to manage your tax and regulatory compliance. We've all been there, right? The end of the year scramble to gather the appropriate tax stocks from suppliers. Well, automation can help with this. Once you've got a portal, now you're able to get the right tax forms and tax information from suppliers before they ever get paid. So now you've got a reason for them to provide that information on the front end. And you know what? The technology can even ensure that you get the right documents and that the information is validated before that payment's ever made. The final key to becoming touchless is to automate the way you pay your global suppliers. More and more, even small companies are doing business globally. Stop trying to rig this up with multiple banking relationships and multiple systems or costly payment methods. There are solutions out there that allow you to manage your global payments in a streamlined fashion so it costs less, it takes less time, you're able to get better compliance, and you're able to get better reporting. By reducing all this friction that is in your current AP process, now you're going to be able to seize on those growth opportunities, right? Now our people are only going to need to intervene when it's absolutely necessary. When you've got a true exception, that's what your staff wants to be doing. They don't want to shuffle paper and key data. Just ask them the next time you see them. They don't want to do that. This is the stuff they want to be working on, fulfilling activities. And when you're in an automated environment, decision making is also taken out of their hands. It's in an automated environment. So now your department's going to operate in this continuous process improvement loop where your processes are consistent, they're enforced, and they're best in class. This has a big impact on how it is we spend our time in accounts payable. More than half of CFOs say that their organization has eliminated at least 40% of its manual processing time by automating. In most cases, this resulted in reallocating, not eliminating, staff. That's what CFOs want. They don't want your staff focused on manual activities. They want them helping drive the growth of the business. That's what this whole conversation today is about. The second step toward becoming a growth-driven AP department is to establish an early payment program. We know that all of those growth generating activities we talked about at the top of the webinar, whether it's building out a sales and marketing team, standing up facilities, or entering new markets, they require cash and lots of it. And one way that we can get at cash, whether we're a supplier or a payer, is through an early payment program. We know that many of us on the buyer side maintain our cash flow by stretching out our payment terms, right? This was a big deal in the last 16 months. But when you start stretching out your payment terms to 45 or 60 or even 90 days, that can have some unintended consequences with your suppliers. And many of us navigate that by offering early payments to our suppliers, right? We say, okay, we've stretched out your payment terms. Now we'll give you something back through an early payment discount. That doesn't necessarily solve the problem. Not every CFO wants to use cash on their balance sheet for early payments to suppliers. So what do we do here? Well, what you should do is integrate an early payment program right into your payables workflow. So what you do is you eliminate this ad hoc negotiation of terms that a lot of us rely on. Some of you are making phone calls or emails to suppliers. Now, what you want to do is you want to be able to do it as part of a process flow where only a click or two is required on the part of the supplier. And when you do this, now your suppliers can be paid upon payables approval. So once you approve the invoice, now they can be paid almost instantly, minus a small percentage discount. But here's the thing, you're going to make your payments according to the invoice due date. A third party takes care of paying your suppliers. And in all of this, you share in some revenue. So what does this do? Well, this creates a win-win for you and your suppliers. Your suppliers are going to get fast and easy access to working capital. It's going to be at a really reasonable rate, and they can be paid as early as today. They can even choose when they accept early payments and when they don't. So if they don't need the accelerated payment this month, they don't have to take it. For you, now you're going to have a better relationship with your supplier. You're going to have the peace of mind knowing they have the cash they need to pay their people. They'll be there when you need to order more goods, and you don't have to use the cash from your balance sheet. Tightly managing your cash flow and corporate spending, well, that means a lot to growth businesses. And that brings us to the third step to becoming a growth generating AP department. What you want to do is find ways to get consolidated visibility into your cash flow, your spending, your potential risks, even your operational efficiency. And the data that goes through our AP departments can do just that. You want to find a way to capture and validate all that data and start using it for things like forecasting and budgeting and planning and cash flow analysis. The list goes on and on. Stop using spreadsheets to manage your data in accounts payable. 40% of all finance departments still use spreadsheets for their financial reporting. The problem with spreadsheets is they're outdated the moment you hit save. They're easily corrupted. They're not always accessible to folks, especially if I'm storing it on my laptop. So you want to find a way to capture as much data from your invoices as possible and serve it up to authorized users when, where, and how they need it. And so how do you do that? Well, you're going to use graphical dashboards that allow you to better track your KPIs. You're going to have drill down capabilities that allow you to get to the root cause of trends in your data, to track historical information. You want to have mobile access so that senior decision makers who are on the go can see what they need when they need it. You want to have export capabilities to get your AP data to downstream processes and systems fast. And you want to have ad hoc reporting so that you can be able to model anything senior management needs help with. The fourth step to transforming AP into a growth engine is to automate reconciliation. We all know that slow and ineffective reconciliation processes make it really, really hard for us to forecast our cash and to be able to drive our growth, right? Well, you want to find a solution that simplifies the reconciliation of payments, whether they're made for just one business or across your subsidiaries. You don't want to have to go and correlate individual balance sheets. You don't want to marry up multiple bank statements. So what you want to do is you want to have reconciliation data that's fed seamlessly into your reporting sources. This way, you can normalize the data for currency considerations or for other ways. And this is going to help you not only get better information into where things stand today, it's going to help you streamline your financial close. The fifth step to becoming a growth generating AP department is to improve tracking and control. You want to find a solution that can help protect against audit failures. And there's a couple things I want you to think about here. I want you to look for OCR technology. You want to be sure that all of the information auditors want is collected. You want to make sure you capture as much data as possible. You also want to look for configurable approval routing. You want to be sure that your policies and procedures for approvals are always being followed. Good luck with that in an email environment. You also want to make sure that you have integration between your AP solution and your supplier management solution. You want to make sure there's less chance of paying a supplier that isn't payable. You also want to find ways to streamline your tax compliance. So you want to find a solution that integrates tax identity collection and verification right into that supplier onboarding process. You want to make it easy for suppliers to submit W-9s or W-8s and value-added tax details. You even want to guide some suppliers in which forms they ought to be submitting. Surprisingly, a lot of them don't know. You also want to have built-in requests or reminders to suppliers to update their tax details. And as I just mentioned, you want to make sure that there's controlled workflows for all of this. Automation. Automation clearly plays a big role in turning our AP department into a growth engine. Before you go out and call up a vendor, there's 5 things I want you to keep in mind. The first, you want to look for a solution that will provide you with as much automation as possible. Stop with the piecemeal approach to AP automation. Second, you want to make sure you find a solution that's accessible. Cloud-based architectures, 24/7 access, mobile capabilities. This is today's reality. Third, you want to make sure you have a solution that provides you with end-to-end controls. You want built-in governance. You want audit logging. Fourth, you want to find a solution that can help make it easy to train your staff and manage change no matter where they work. And fifth, you want to make sure you find a scalable solution. These are foundational technologies, not throwaway technologies. Find a solution that has ways to scale with your business. What's more, you want to make sure you assess your needs. You want to pay careful attention to just how mature is your business? What are your core strategic priorities? What are your long and short-term goals? Do you have multiple subsidiaries? Do you have international suppliers? And what is it that your frontline staff believes are your biggest challenges? By automating accounts payable, now you're going to transform your department into a growth engine. You're going to be able to help your CFO focus on the things that matter most, growing the business and achieving success. That brings us to our 4th poll question, which is about to be displayed on your screen. This time we want to know, which of the following do you believe is the biggest benefit of automating your AP operations? Is it cash flow optimization? Is it better spend management? Is it risk mitigation? Is it improved operational efficiency? Or is it all of the above? Take a moment to respond to the poll question now displayed on your screen. We'll discuss the results in just a moment. We haven't talked a lot about risk in this webinar, Derek, but the fact is that fraud is at an all-time high. How does automation of AP play into helping eliminate risk and drive the growth of a business?
It's a great question. I think that a lot of it has to do with if you can automate some of these processes, particularly approvals, particularly around assessing your suppliers, knowing your suppliers and how they, where they are, what bank accounts they're using, understanding that, that especially if you start going cross-border, there's more risk inherently around those suppliers. So how do you solve for that?
We asked our attendees which of the following do you believe is the biggest benefit of automating your AP operations? 18% of our attendees believed improved operational efficiency stands alone as the biggest benefit of automating AP operations. 2% said mitigating risk is the biggest benefit. 2% said optimizing cash flow. But look at this, Derek. 75% of our attendees say it is all of the above. So the question you might have for yourself now is, how do I get started? And to help you out with that, I'm going to hand it off to Derek. Derek?
Thank you, Mark, and thank you for the IOFM community for participating. Wow, 75%. I don't think 75% of people agree on anything, so that's astounding. I won't go too far into what Tipalti is and what we do. I think most folks know by now. But I did want to call out one specific company we work with. This is Zola. Zola is an e-commerce company. They provide a site specifically for people who are looking to get married, and so they wrap all of their offerings around that. They, with us, process approximately 10,000 invoices a month, and it's just two ladies doing that, and but they're able to kind of do the kind of part-time, if you will. It's not a full-time job to pay their suppliers, and if you can imagine 10,000 supplier payments going out. And because they are e-commerce, they have quite a few global suppliers in particular. So looking as well as partners, event partner type suppliers, a lot of stuff is going through them. But their ability to scale, specifically e-commerce, we talked about it earlier, the need to scale is highly important. They have thin margins that they have to work with. And so they're able to grow the business that way. And it's pretty exciting for them. The thing we're proudest most about is our 98% customer retention. It's a huge part of why we're doing this, why we continue to improve the platform. Tipalti is a holistic AP platform that essentially does what we've been saying is like bring the entire process in line. Um, we provide supplier management. We have some tax compliance checks that we do as part of onboarding. We've added procurement into the mix. So being able to do PO management, we acquired a company called Approve, and now we're slowly integrating that into our own platform, and so that you will be able to have PO management matched with invoice management and invoice processing. So that whole approval cycle is contained. And then, of course, our global remittance engine pays to 196 countries. It does all the currency conversion. It goes over 6 different payment methods. And we've got some other additional functions around if you have multiple entities, we can also set up FX processing, FX management around that. And then at the end of the day, at the end of the week, at the end of the month, it's all about reconciliation, getting all of that data back into your system so that you know what your spend and outlay are. I'm not going to do a big push about Defaulty. If you do want to learn more, definitely reach out and connect with us. The other opportunity would be to join us for Illuminate. This is happening in a couple of weeks. We're really excited. We have Venus Williams, who's going to give a keynote, and then we also have Robert Major, who, if you didn't know, Bryan Cranston plays him in a movie called Infiltrator. He is a cartel busting undercover agent, and so he'll have some great war stories to go through. So definitely check us out on Illuminate. We'll have product roadmaps. We have a lot of thought leadership. I think there's over 23 sessions of content there. So it's a 2-day event. We were thinking 1 day, but we blew it out to 2 because there was just so many things we wanted to do. Lots happening there. And if you are a CPA or the CPA type, email me. I will get you information about our partner day as well. And so there's a little bit more sneak preview stuff there. Other than that, I will hand it back to you, Mark.
Thank you so much, Derek. And now we're going to enter the Q&A portion of this webinar. If you haven't already submitted your question for Derek, or if you've thought of another question for Derek, go ahead, use the chat tool on your screen to submit them to me now. We'll answer as many questions as time allows. One of our attendees, Derek, writes, do we need to process a certain number of invoices or be a large organization in order for automation to make sense?
No, not necessarily. I mean, I think if you're doing 10 a week, it's probably not a hardship. But the moment you feel it is a hardship, the moment you stop wanting to do it, uh, then it becomes a much easier decision to make. And there are wonderful products for smaller companies as well. I'll plug Bill.com. How about that? I'm probably not allowed to do this, but for smaller businesses, Bill.com is a sufficient process. But as you start to grow, as you become more in need of supporting multiple entities, doing more global, then you can come talk to us as well.
Another attendee writes, I'm sold on the need for AP automation. Are there certain steps I should be taking in my department internally before I implement a solution?
Certainly, you should assess where you are. Our team can also help with that if you would like us to come in and take a look at your processes, figure out where some optimizations could be. We also have partners that do that. So it really is about considering it more of a culture change. It's not a major culture change because you're actually taking away a lot of the sludge work that's out there. But if you are looking for, um, what are your growth goals? Think about that. And also, it I say this often, but you're not planning for today, right? So you're planning for next year or 12 months from now or 2 years from now. That's how you make a plan. And so if you're planning for today, it's too late. Don't solve for today's problem, solve for the problem you want to have, uh, in a year.
Another attendee writes, do you have any tips for getting buy-in from senior management?
I think senior management is probably more into this now. They have limited headcount. They want to apply that headcount more efficiently, more productively. They want to be better at what they're doing. So they're actually more often than times the ones pushing for a certain amount of automation and holistic process management.
Another attendee writes, is the type of solution you're describing today a replacement for our Oracle ERP, or does it work alongside our ERP?
Yeah, no, we're not. We're definitely not an ERP. But ERPs are wonderful recorders of information. They're great storage areas, if you will, but they're not designed to have these transactional processes. And they're not designed to be transaction engines. So what we do is we consider ourselves like the last mile of the ERP, which is often in some organizations you have people who basically say, okay, it's my this is what I'm told to do. So they pull that information out of the ERP and then they're setting up wires and or they're mailing checks. So it's not a replacement for ERPs. It is actually more around how do you manage the transactional side, manage the approval side for all this, and then using your ERP more as a repository for the information.
Another attendee writes, what's involved in deploying a solution like this?
Honestly, it's cultural in a lot of ways. Once you are ready from a process perspective, it takes maybe 3 weeks. That's the shortest well, actually, I would say 3 days is the shortest I've seen, but generally they run around 3 to 8 weeks of time just to get everything set up. We have quite a bit of compliance because we are a money transmitter. We want to make sure that our customers are legit. And so we run through compliance checks with our customers. We've denied customers because of the risk factors. Like we won't work with cannabis companies or adult industries and things like that for the very reason of we have to maintain our blue ribbon standard, if you will, as a money transmitter. And so there's quite a bit of compliance we do ahead of even implementation. Once that's clear, oftentimes it's just training, working with your team, getting your supplier management system set up so that your suppliers could start onboarding. All the onboarding is self-service. So suppliers are able to go into the system, provide their payment details, choose the payments types that they want. So maybe they prefer wire, maybe they prefer ACH. We give them that option, and then they provide all their EINs and whatnot.
Another attendee writes, where do I find the registration information for your Illuminate conference?
Oh, awesome. Yeah, just go to Tipalti.com, and then at the very top of the homepage that we actually have just a click through there and you can just go there. But yeah, that's thank you for asking.
Diane gets a gold star. That will be our final word. We're going to leave out a high note for you, Derek. Thank you so much, Derek, for sharing your insights with us today. And thank you all for taking time out of your busy days to join us. And with that, I'm going to hand it back to Kelsey. Ms. Kelsey.
Thank you, Mark. And I just have a few housekeeping notes to go over before we officially close out. If you could please fill out the short evaluation form that will appear once you close out of the webinar. This will help us better serve your needs in future webinars. As a reminder, I've had many people asking me, the on-demand materials will be emailed to everyone within 2 business days, and this will include the link to the recording of today's presentation, as well as a PDF of the slides. And thank you again to Derek and Mark for a great presentation today, and thank you to all of our attendees for taking the time out of your busy days to join us. This webinar was brought to you by IOFM and sponsored by Tipalti. Thank you all and have a great day.